Shall we start with the oil or shall we start with the sentiment?
Afternoon, Loretta. Oil, let's start with that.
Okay, Ghana has revealed that by the end of April, output would be in the region of 80,000 barrels per day. By August, 120,000 barrels a day. Can they work at optimum level, and what are they doing to do so?
They certainly do seem to be working at optimum level. In the statements that came out, where they're saying currently production's at 70,000, they're adding another 5,000 to 10,000 per week to get to that 80,000 by the end of the month. So it's certainly been ramping up since they started last year on a very prudent approach, but looking at adding production capacity as they go along. So we firmly believe they should be able to get to that 120 mark.
And obviously they're starting to cash in because they pumped the oil in December. They started marketing it mid-January, and the first check has come through at just over $110 million to the state oil company, and that's at a benchmark price just above $110 of oil. Will they benefit, obviously, I think, from the windfalls of a rising oil price? And are there any other things to be cautious about in terms of production and capacity issues?
I think it couldn't have come at a better time. Obviously, they hit the bull market in oil, and I think allied to some production drop-offs further north in Africa, Libya, for example, has just heightened the focus on these new oil fields like the Jubilee field. So there's a lot of focus on these fields, and the Ghanaian government's already shown how responsible they have been in managing oil and looking into the future, either using it in a special reserve fund or possibly a sovereign fund.
I wanted to raise that question in terms of they may be responsible in producing the oil, but do they have a master plan in terms of savings for windfall? Nigeria had an excess crude account. There's some problems there. They're now talking about a sovereign wealth fund. What are innovative ways that Ghana could pursue?
I think all the noises coming out of Ghana are very positive. They've had the benefit of looking at other economies in their region and seen some of the errors that have been made in the past and over the past decades. And being relatively new to oil, they've taken this very prudent approach. They're looking at very conservatively managing the cash windfall, and that's exactly what it is. They had never budgeted for it in the medium term. Oil's now come on stream, and they're using it as a windfall.
I mean, just a question that spins off from this is that West Africa in general is expected to produce something like 20% of global oil output in the next few years, and I suppose that's a combination of oil from Ghana, Cote d'Ivoire and Nigeria. But others who are skeptical say not enough exploration work is being done in the region. A lot of these countries are sitting on untapped reserves, and that's where the work needs to be going on. Is there ongoing work in that space as well in Ghana?
Certainly is. There is. There was recently some gas finds which were new to that market. Previously, most of the gas had been around the corner in Nigeria and the surrounds. So there's a lot of exploration work happening. I think the prudent approach that we spoke about is not just dishing out blocks willy-nilly, looking at who's going to be the best provider, who's going to partner best with the state or indigenous providers to produce the best benefit for the country.
Do they have a good mix of local energy services companies working or buying some of the acreage from international companies like Tullow Oil that are going to be listing later on in the year? And the reason I'm asking you this is increasingly we're hearing of international oil companies talking about disinvestment or subduing their investment activities in African countries because the regulatory environment seems to be changing willy-nilly and creating a lot of uncertainty.
I don't think it's quite willy-nilly in terms of the how regulations are changing. There is certainly master plans in place. All the major oil-producing countries on the West Coast, well, if we look at the two major ones, Nigeria and Angola, certainly have indigenization plans. Angola, as an example, have Sonangol in as a partner on every single field in that country. Increasingly, oil service companies who providing these services, be it laundry, be it shipping, be it parts and services to the rigs offshore or the onshore fields are all domestic. So the indigenization is not being forced down the majors' throats. It also lets them focus on their core business, which is searching for oil and getting it out the ground.
Well, obviously what we have seen in countries like Nigeria is huge synergy between the financing of oil activities by banks and then profitability of a lot of these banks from profits accrued in the oil sector. That then raises the question for those investors looking into Africa, where do they see the greatest opportunity? Is it in the energy services business? Is it in banking activities? Where is it?
Oil and gas have been perennial favourites for FDI because it's relatively quick to recoup the investment. Mining is, given the high commodity prices at the moment, mining again is seeing a lot of interest, and particularly interest from Asia, which in the past hadn't been that active in the mining sector. Telecoms, another perennial favourite. South African corporates going in, as well as some of the globals. We see the Indian operators as well as some from the UAE, all having focus on Africa.
What do they say for them are the most pervasive risk? Obviously, infrastructure is one of those things everybody's always talking about. Politics, it's the bugbear all the time. But for them, once they've evaluated some of those, what are major concerns?
The concerns are always around governance and stability. If you have good governance and you have a stable democracy in a market, it makes signing that massive check up front for long-term FDI so much easier.
And what's going to offset the risk?
Offsetting the risk? Well, if you look simply at the economics of it, risk return, higher commodity prices lets that brings the higher return, which does offset risk. Thorough research and being close to markets or partnering with people who've been in that market or regional players who know the market well.
And African hotspots for prospective investors, obviously if everybody wants to flood into energy and gas, we can assume West Africa, Nigeria, Angola, but what are the what do I call the hidden gems?
Uganda's seeing a lot of interest, particularly again around some of the oil and gas funds in that market. Upgrading some of the mining infrastructure in the DRC, and particularly in the southeast DRC, is always of interest too.